Alright, let me make sure this is turned on. Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker. And I've returned today to whap and tap on your head with another Diary of a Mad Black Man rant. So today, I want to talk about kind of some personal shit, but more on life insurance. I have a smoke and talk with y'all. Me and a partner of mine, Mr. Robinson, used to call this powwow session. But at any rate, before I go on, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So, I want to talk about the fact that even though I sell life insurance, I don't have life insurance. So I've been selling life insurance since my 20s, and now I'm 40. And since I started selling life insurance, I was unable to get life insurance, which is why I don't have life insurance. So people think getting life insurance is just you apply and buy, right? All you do is put your information down there and then they tell you how much it is and that's it. And that's not exactly how it works. This is actually a financial product, a financial tool. So because it's a financial tool, you go through underwriting just like you would go through underwriting for a loan. Right? So they actually look at your finances to make sure people aren't doing things like severely over-insuring you to actually knock you off. Making sure that there's insurable interest so there aren't things like STOLI, which is stranger-owned life insurance. So they also want to check their risk, because life insurance is not if something is going to happen, it's when something is going to happen, right? If somebody made you a bet that you would eat at some point in the day, right? And when you ate, they had to pay for whatever you ate. Now, you don't have a normal eating schedule, so you get up, you go through your day, and, let's say you work in retail. So, because you work in retail, your eating schedule is definitely not going to be on the dot at the same time every day. Right? And this person, somehow their money fluctuates all throughout the day because they're a day trader. So at any period of the day, they might not have enough money to afford your lunch. Even though the insurance company will have substantially more than enough. But they also want to make money back off of what you give them. Because let's say you give me $5 and you say, listen, I'm going to give you $5. And tomorrow when I eat lunch, if it's up to $300, you have to pay for my lunch. And then I pay for your $300 lunch no matter what it is tomorrow, no matter what time it is tomorrow, right? And then let's say tomorrow you just absolutely don't eat the whole day. So then you say, okay, I'll give you another $5. And then if I don't eat tomorrow, you'll keep that $10. But if I eat tomorrow, you still got to pay $300. And let's say for 10 whole days you don't eat. So you gave this person $50 whole. But then day 11, you eat. So now they have to give up $300 whole. Right? So that becomes, they have to weigh their risk. Right? How many days do you think you're not going to eat versus you are going to eat, right? So it's something that is going to happen. They just don't know when, right? Now, it's likely that you're going to eat every day because guess what? People die every day, right? And most people don't go for life insurance until it's too late, until they're old and it's really expensive, or they're sick and it's really expensive, or they're sick and they can't get it, or they're old and they can't get it. So life insurance isn't paid for with just money. You actually pay for it with your health and your age. And permanent life insurance, shout out to Diamond Dave, is probably a better decision for when you're younger. Now, the difficulty is when you're younger, you might not have a lot of income, but what you do have as a youth is something called expendable income. And so what's the difficulty is a lot of these financial people run around and they tell you, well, get term while you're young because it's cheap and you don't have a lot of money. And when you get older, you'll be making more money. So you'll be able to afford more life insurance in the future. That's a way for them to get a sale off of you because you're like, yeah, life insurance is cheap and it's a term policy. 99% of term policies don't pay out, by the way, because they lapse, because you end up not paying them for a month. And that first month you don't pay it, boom, it lapses, right? So the truth is that the older you get, the more likely it is that you'll have less expendable income, even if you have more amount of income coming in. Why? Because you're going to have more responsibilities. Wife, kids, rent, shit like that, right? Your mortgage, college for your kids, student loan debt for yourself, right? All these different types of things that occur. So it becomes more difficult to have an expendable income. Whereas if you're, 17, 18, 19, 20, 25, and you're in college and, you're on a ramen noodle diet anyway, throw that money in a life insurance policy and let it grow. By the time you're 40, you'll have a shit ton of money. Or at least substantially more than you would if you put it elsewhere. Right? And you'll have that financial protection. Plus, life insurance actually does add to your net worth as the cash value grows. Okay? So, it would be germane to get insurance while you're young. And the younger, the better. Because, again, that's why I don't have life insurance. I've been selling it for damn near 2 decades. And every time I apply, they decline me. When you get declined, it's worse. It's like being in high school because everybody wants to talk about it. Run tell that, right? So they have something called the MIB, Medical Information Bureau. So the Medical Information Bureau actually is where the insurance company, and this is why you can't just apply and buy, is where the insurance companies go and they verify. It's just like the HIPAA forms you would sign, but it's a little more in depth. The HIPAA forms actually allow insurance and healthcare companies to give your information to the MIB, the Medical Information Bureau. So they could check records and see what other companies or carriers are you're applying for life insurance for. I had a guy apply for life insurance with me, and then one of the carriers that I applied for him with, returned back to me and was like, he's got 9 applications elsewhere, and the reason they knew that is because they checked the MIB. So that gets really interesting as well. But at any rate, that's one of the things that's frustrating because especially for black men in America, one of the ways that we could create a power dynamic is to actually create generational wealth. Simply put, even if it is a term life insurance policy, stop getting small shit if you're getting a term insurance policy. If it's going to be cheap, then get a big fucking amount. You sitting here, oh, I'm going to get a term insurance policy for $68 a month because it's a $250,000 policy. Didn't you say you want to leave your family M's? Generational wealth? Spend $300, $400, $500. Leave $4, $5 million if you're going to get a term policy. Otherwise, stop wasting your fucking time. Right? If it's going to be cheap, if I'm going to spend $68 and get $250,000, why wouldn't I spend $680 and get $12 million? Right? It's a substantially larger return. But it's not taught to you like that. It's taught to you often for the agent to get the quickest sale. I don't worry about a quick sale. Generally, when you sit with me and I show you an illustration, you're going to look at it and be like, whoa, can I put more money in there? You've rarely been in a situation where you've asked a salesperson, can you pay more? But it gets frustrating because we could create legacies. Simply put, get a $10 million policy. Boom. Die. In your will, leave it. Hey, listen, I want this to go into a high yield savings account that's getting, I don't know, 0.5% interest. Right? That 0.5% interest is $50,000 a year in perpetuity. Because 0.5% of 10 million is 50,000. Right? So again, I get big sales with my clients because I teach them the value of what they're doing. I don't care if it's a term policy, a whole life, a universal life, an indexed universal life, or a variable universal life. And a fixed annuity, a MIGA, which is a multi-year guaranteed annuity, an indexed annuity, or a variable annuity. And a substantial boatload of other products I'm not going to go through right now. But at any rate, I'm going to get the fuck up out of here. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker. And I just tapped and whapped on your head with another Diary of a Mad Black Man. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.